All right, here's a market update, Friday, May 29th, around lunchtime here. So we'll just look at the longer term S&P. This is what we've been looking at the last few months. And again, this is just, information that I'm sharing based on what I'm doing with my accounts. This is an investment advice, just sharing some knowledge that I've, acquired over the years. So again, looking at the S&P, this is our longer term channel here, last couple of years. We started, talking about this channel here, right? Last year around the August timeframe, we came up to this first trend line here, this white one. And then we got above that, came up to the second trend line here, which goes all the way back to 21, bouncing around there for a while. And then we had that, strong pullback in the same time frame as last year, right? April last year, we had the, March, April, bear market. And then we came down in March here, came all the way down just about to the 300-day moving average on the S&P here, this yellow line. And so, we took off from there. And again, as I'd been saying, your average bull market lasts around 3 or 4 years. So, I think it was safe to say that this was going to be, a correction as opposed to, another bear market, 20% territory. So I think we got down about 10% correction on the S&P here. And then we just took off. A lot of gap ups here, but just a very, very strong move. And what I had been talking about, especially in that last video, well, really, I've been talking about it for, really since we've been up against this upper trend line here, is that we were hoping we could get above this trend line and start a new channel. And that's exactly what we did here. And you can see when that happens, it's usually a pretty big gap. When we cleared it here, this was back on May 6th. But you can see this big gap here, and this has been taken off ever since. You do have an opportunity to retest this. That often does happen when you break these upper trend lines like this and start a new channel. You'll often come back down and retest that trend line. We didn't quite make it here. I thought maybe we'd get bounced back down to the 21-day, but which is this brown line. We didn't get there. Got as low as 73.33 on the S&P, and then we're at 75.82 today. So making new highs all across the board. In terms of the S&P and the Nasdaq, but very, very strong move here. And again, we are extended. We're above all the key moving averages, the short term averages. The 8. The 8-day, the 13, the 10-day, all these, we're well above the 21-day. But you basically keep riding this, and if we get a pullback down to like the 21-day, if anything, it's a buying opportunity. We're 13 months into this bull market. Like I said, typically average bull market is 3 to 4 years. There will be sector rotation, but basically, to me, you look at former lows, as I've been talking about in these videos, as support, former highs as resistance. And if you're making new highs, like a lot of these, chip stocks and memory stocks are making, you just basically ride them as long as you can. You can see our slow stochastic here is, staying elevated, which is good. That shows strength, and that's going to continue to be like that. That's what you want to see in a bull market. So, looking at some individual stocks quick, SanDisk, obviously, this thing is just an incredible leader here. We picked this thing up back around the 600 area, and it's just more than doubled, really taken off nice there. We originally had it, believe it or not, at 185. That was November of last year. That's when we had this dip here. As I've talked about in previous videos, I thought we'd get a handle here as part of this cup formation, and that didn't happen. It just took off on January 6th. And it's never looked back since that time frame. Came down and tested the 50 a couple times here, which was a great buying opportunity here, around 550, 600 range, and just taking off from there, staying above the 21-day moving average. And again, this 21-day moving average is critical. That's the brown line I'm highlighting here. As long as we stay above that, we should be in good shape. Once you start breaking that, then you could look for the 50 to provide support. But this thing just keeps on moving like all the memory stocks, and just a great leader this year. So, when you expect to see at some point this thing is going to, correct, and when that happens, what you want to see is a big spike, in terms of the volume. So on the pullbacks, you want to see lower volume, which are these red candles here on the volume bar. And, you can see the pattern here is that, on the up days, you're seeing much higher volume than on the down days. And that's what you want to see. And when this thing finally does correct, you'll know it. Typically, it doesn't always happen, but typically, like if we look at the GLD, which is the gold ETF that I've talked about in the past, this was a textbook, topping pattern here. Look at this huge volume on GLD. So that was in January, I think. Yeah, January 30th, we had this huge. Well, January 29th and 30th, we had these huge volume bars. And that's a typical sign when you're hitting the topping pattern. You have a huge volume bar, and oftentimes you see something like this here. This didn't quite end up lower on the 29th, but you could see it made a new high, and then it did basically like a bearish reversal. And that's oftentimes what you'll see, and you can see it's never gotten up to that again. Sometimes you'll have a retest. Try to do it here, in February, but oftentimes that's the high, and it may be many months or years before gold gets back up to that, that level. But that's what you look for. Like on the SanDisk, you look for a really big high volume day like this, and preferably it makes a new high, and then you close down that day in the red, and that's kind of a reversal candle. And when that happens on really high volume, that's when you got to be certainly you want to be selling shares on a day like that, based again on the volume. And that's independent of where the moving averages are. That's just an indicator that I've seen over the years, and that happens on a bottoming pattern as well. When you get a huge volume spike like this on a low, and typically a reversal, right? You make a new low, and then you end up higher that day. Whether it's a stock, an ETF, an index, that's typically a bottoming candle. All right, so again, SanDisk, we're just riding that, as long as we can, keeping an eye on it every day. But just hope that this thing keeps on going. Who knows how far it's going to go? Some of the other memory stocks, STX here, Seagate Technology again came down to you could see this 21-day support back on the 19th here, and the 18th got a nice support there. That's what you want to see, especially on a really strong stock like this in a move. They'll typically bounce off of that 21-day moving average. Western Digital, another one here. It's down a little bit today, but another nice move off that 21-day moving average. Let's see what else. BE, Bloom Energy, we've been talking about this one. This is actually down today, but you're kind of bouncing off the 21-day. You can see we came down below that on the 19th, and we're hitting that again. So, this is an area where you expect to see a bounce. If not, this former low here at 241.75 would certainly act as support. Let's put a line there. I always like to mark these former lows, 241.75. And I make them orange on my chart. So that's where we want to make sure, we're staying above that. If you're buying on the 21-day here, you want to maybe look at a stop loss, just below this. But then, you're coming up on the 50-day. If we break 241, then you're looking at the 50-day around 223, and that would certainly be a buying opportunity. We got this big gap fill. These blue lines are the gaps. So you can see we had a big gap here on April 14th, right before tax day, actually. Yeah, April 14th, we had a big gap up. So that blue line indicates that you've got a gap there that hasn't been filled, which is okay. Those act as support. If you get down to this level, but again, longer term, those gaps often do get filled. Let's see what else. Micron, this is just taken off. Unbelievable move here. Came down to the 21-day around the 19th and just taken off. So another really, really strong stock here that that I've been talking about. Let's see what else. Caterpillar has been another nice one. It's down today, and here we're hitting the 21-day here. You can see this brown line moving average is your 21 days. So let's see, the 21 days 875. We're at 876, so we're right there today. So there's your former low is at 845. So you expect that to provide some support there between this level 876 and 845. If not, we got 814 below that, the 50-day if we end up going down that far. But you know what I like to go back to the S&P when I talk about that channel, that new channel that's formed here above this white trend line. Um, you know, this is also comparable or you know, analogous to a lot of the stocks as well. If we look at AMD, same thing happened here. You know, this was a longer term trend line. If I look at this in a 5 year, we were in this channel here. You can see bouncing forth, back and forth between this upper white trend line and this lower trend line. And then all of a sudden, you know, we break out of that big gap up here. We break out of it, and now we're just going parabolic. But that's often what happens when you first form a new channel. This didn't even come back and retest this upper trend line at all. It just kept on going. Um, but oftentimes you will have a retest. This will come back down and actually test that upper trend line and then, you know, go from there. But just an incredible move with AMD. And same thing with Apple. We were buying Apple when we broke a downward trend line here. You look at my last video, I drew this trend line here. Once we bounced above that, you know, that was around 260 something. You know, we basically took off from there. Now we're up against this upper trend line here, and you know, like the S&P and AMD, you know, we're you know, it's looking like we're retesting that, but you know, we're above that now. So as long as it can stay above that upper trend line, this thing should keep on going. It should be in good shape. Um, let's see some of the other stocks of want to talk about. Let's see here, Nvidia. That's, you know, around the 21 day right now. You can see we're in a extended channel here. So we've been bouncing back and forth the last couple of years between these two upper, you know, this upper trend line and lower trend line here. And you can see we're at about the 21 day. So, you know, the hope is here that we get to this trend line, this upper trend line, and we break it just like the S&P and, you know, some of these other stocks, AMD and Apple. You know, the stochastic is a little low right now. So, you know, this is if you're looking to buy this at this point, you know, the 21 day is kind of your support level. Otherwise, you know, we're going to start breaking down and you know, get down to maybe the 200 range if we start having a sell-off, which is around the former low here from you know, early May, and the 50 days around 199. So those would be your support levels. PLTR broke through a downward trend line here. If I do the 1 year, you can see that happened yesterday. So if you caught that, that was around the what was that? That was about the 50 day yesterday. So it was like 141 level, kind of broke out of this downward trend line, and now it's up 8% today. So you can see that's, you know, that looks very, very positive. And, you know, there's been a lot of talk about Palantir that they, you know, spent too much money on, you know, their capital investments, AI and all that. And you got pretty famous traders, investors like Michael Berry that are, you know, shorting it. I don't know if he still has his shorts on or not, but as this thing, you know, starts breaking the new highs here, like this 162 level will be critical. If we break above 162, you're going to have a short squeeze. So there'll be a lot of shorts that are getting out of it, and that'll really push the price up if it gets above 162. So, you know, and again, what we look for in these trends is higher highs and higher lows. So you can see we did make a lower low here, April 10th, 122.68. But if we get above that 162.40 level, that'll be a higher high. And you know, our last low was 128.75. So that's basically your range right now. Yeah, this could go sideways. It could be consolidating here, and then it could, you know, end up going downward. But you know, again, if you have a trend channel like this break, you know, you kind of put your stop loss right below the former low here if you got into it in this area here, or, you know, yesterday when it broke through this. You know, I think Palantir looks good longer term, but we'll have to see. We'll have to see if we can get above the 162 level. Let's see what else. Now there's been a lot of discussion on ServiceNow. This thing really took off today. It's up 13.5%. But you can see this was in a massive downward move here, and you know, it's looks like it's bottoming out, and now it's starting to go higher. So that's one to keep an eye on. And that's pretty much it. I was going to keep this video short. There's a lot of stocks that look like this right now. SMCI is another one. They're just taking off. I mean, way extended beyond all the key moving averages. But, you know, if you're fortunate enough to get a pullback to, let's say, the 21 day, it's a buying opportunity. But it clearly looks like these trends have changed for many of these stocks, especially in the software area. But SMCI is a chip stock, was really getting hammered here, and now it looks like it's starting to make higher highs and higher lows. So a lot of stocks that look like this. Marble, we've talked about that one as well. That's another one. Just a parabolic move here, pulling back today a little bit, but just a lot of charts that look like this right now. So certainly wouldn't be chasing extended stocks here, but if you get a pullback, one that I like here is that's taken off recently is ESLT. So you can see this chart pattern here. This goes back to the fall of 24, but you could just see how that's been very consistent. Primarily above the 50-day moving average. And if you look at the weekly chart, which I like to look at longer term, you can see how this is hugging the 21-week moving average. Again, this is the weekly chart, 5-year weekly. But you can see here when we started this move, which started in September of 24, you can see how that stayed pretty much above the 21-week moving average. We came down, in December of 25, and then this thing just took off here again for a second leg up here, and now we're kind of hitting that 21-week the last couple of weeks, and now you can see we're taking off this week, with earnings. So, could consolidate here a little bit, or it could, again, come back, test this 21-week moving average. We'll have to see how this plays out, but I like the stochastic here. It's low. You can see last time when it got to this level, what happened. This could be a little bit of a flag or a pennant that's breaking out here. So we'll have to see how this plays out. If it can get above this 1016 level, then we should be in good shape. But this is where, again, if you're looking at the long-term charts, these weekly moving averages really help. The 21-week is a really good buying opportunity if you've got a really solid, fundamental stock. And then if you look at the daily here, obviously, we came down pretty far here, almost to the 150. And, you see we actually came down and filled this gap. So we had a gap here that goes all the way back to February. And that got filled, which is good as far as that follow-through process is concerned. We did break some former lows here, but it looks like we're above all these key moving averages here now, including the 50-day. So I'll have to see what happens here. We did have a gap up here, and this was from the other day here, the 27th, which was Wednesday. So we do have a gap there now to be conscious of. That's 828, so we're at 874 right now, so it's possible that gap gets filled, but again, this could be a good support area here based on the weekly chart. Okay, that's pretty much what I want to cover. Again, as far as the S&P, this thing just keeps on making higher highs. Great move here, and again, if we do have a pullback, look for the 21-day for support. But you can see we're in a good solid move here, strong stochastic, and as long as we stay above this white upper trend line here, I think we're in good shape. Okay, that's the update. Hope everybody has a good weekend. Take care.